talk to our pals, Jack Barusian, chairman of SmartX Data, and Pete Nigerian is the co-founder of Market Rebellion and Option Monster. So, Pete Nigerian, I'm waiting for a breakout here. Profit, some's got to happen. The market's been bouncing around and blah, blah, blah. What do you make of it?
Well, I think the amazing part was if we just look just at Friday alone, how resilient the market really is right now, Larry. I mean, when you have a situation like we had and the tariff talk with Trump and everything else and all the concerns that people had, and we also have gotten a little bit more of the macro side of things as far as the CPI and those kinds of numbers. I think it's pretty impressive. And the one thing that has been, again, I think a big part of what the markets and why we've gotten over at least 50,000 already in terms of the Dow is these earnings have been absolutely spectacular for the most part. And the only flaw, if you want to call it a flaw, is the concerns that people have had essentially with the CapEx. And those concerns, I think I understand to some degree why people have concerns about that. I don't, because I think it's just the progress of where we are going and the demands that people are looking for into the future. And that I think makes a lot of sense on the CapEx. And so that's hurt a little bit of the guidance here and there. But overall, again, the earnings have been absolutely, for the most part, pretty spectacular and very, very impressive. I mean, John Deere is a great example of that, Larry. Just the other day, they put up some incredible numbers. The revenue was only up about 13%. That's not so bad, I guess.
Yeah.
Had a great diversified strength across the things that they do, and they had good profits. And that's sort of what we are seeing more and more and more of over the last couple of quarters. So I'm impressed with what we're seeing there. And even with Walmart, they did have the guidance that they put out there that was a little bit weaker, but I think that's just the smart decision to make right now because, vision's not all that easy to look at, but their numbers that they put up for the quarter were outstanding. So, we just see that sort of metric coming, it seems like more and more and more, where the numbers are fantastic, but, the visibility through the future is still a little bit tougher.
Well, profits are the mother's milk of stocks. I always say that. And profits are huge. And the consensus of future profits is very strong. It's really mid double digits, I think. I always track Ed Yardena's stuff. Ed Yardena is so good. Anyway, I think profits are great. So the thing is, Jack, this is not a trick question, but I think we're going to bomb Iran heavily, okay? I think it's coming. I hope it's coming because they've killed 32,000 people, and God knows that number is probably even low. We were just talking to Robert O'Brien about that. And the president is starting to talk about that. And the oil market has had, some little bit of adjustment, even though there's really a surplus of oil out there. But it's up about $10, maybe a little less than $10. If we make the move on Iran, Jack, what does it matter? What happens to stocks?
Well, to stocks, I don't think it really matters. I think to oil, you've got about a 20 to 25% premium built into pricing right now. If we were to see something happen in Iran, depending on how decisive it is, I would think that 25% can come out right away. And remember, there's a lot of diplomacy that's taking place that's behind the scenes that we're not aware of. Indeed, if we were to go in there, I've got a feeling that we're going to get a lot more support than we think we will, or the world thinks we will. All of that is probably going to be good for stocks because we'll end up seeing some deflationary pressure coming out of energy because of that. And the one thing that Pete said that he's so spot on, this market is so amazing lately. Remember where we were 10 months ago? We've seen a 40% move, Larry. All right, off of those lows, and the market is digesting it and not really moving much. I mean, within just a few percentage points. That is so healthy that I can't even begin to tell you from a technician standpoint. And you couple that with the fact that, it basically shrugged its shoulders at the tariff news, which tells you that it really does not care. The thing that the market really cares about, and I think that I'd love to hear Pete's, take on this, is the fact that we still have the Fed too tight. You can see the 3 months at 3.6. You can see the 5-year at 3.6. This is wrong. We need to have a looser Fed.
That's a good point.
And until we can get there, we're going to still kind of go sideways a little bit.
The short end it's flat or inverted. And that's a great point. So you really would, the 3-month, AKA the Fed funds rate, AKA the bank rate, should be 3. Even probably you could get to 2.5. And I think once we take out Iran, the oil will come back down to about $55 a barrel. That's what I'm thinking. Well, Pete, have you? What's your take on the Fed and Jack's point about the short end is too high, inverted?
Yeah, and it sure has been a tough week, too, because of the fact that, you start looking at what the Fed and some of the commentary coming from there, and we, are they truly split, guys, on the cuts or the raise? I'm with you. I find that to be sort of strange, to be honest with you, but I do think hopefully calmer heads will prevail and we'll get the cuts that we probably haven't been getting. I always go with this and say that I think it's so interesting because they always say how data-driven they are, data-driven, and that's great, and I think that's probably the right way to do it, but how can they possibly give us the kind of forecasts that they've been giving us, given that? I just find it amazing because they don't have the data in front of them.
Completely. Right? They're always completely wrong. Even the 10-year, I got at 408. I mean, 10 years slipped down. I don't know whether it'll get below 4 or not. But the short end of the curve should not be inverted or as flat as it is.
Well, especially when you see the rest of the world, Larry. I mean, you see where the short end is trading in Europe, where it's trading in England. I mean, it doesn't make sense for us.
Where is it?
Where, I mean, well, look, you've got the Boone trading at 2.5. You've got a ridiculous interest rate scenario with the relative rates that we're trading at around the world right now, and all of that needs to be adjusted. And quite frankly, President Trump has been trying to do it, obviously with the tariffs, and there's a bit of relief that's out there, and I'll share this with you from me and my fellow conservatives, because it's not that President Trump will do the wrong thing, but what if Bernie Sanders ends up in a nightmare scenario in that presidential office? Okay, I don't want him to have those powers, but at least we've got a president that can work his angles the right way. Remember, we were there. I was there when Daley was Commerce Secretary, and he came in and told us all that the world was changing. We had to bend over backwards and create an unlevel playing field for us to export American freestyle capitalism around the world. Well, we did that, and then he assured us that things would level off. Well, it never did. It stayed uneven, and that world trade picture is really what the president's trying to fix.
Which I agree about the president's fixing his reciprocity. Daley, you're talking about Bill Daley?
Bill Daley was Commerce Secretary.
He was a Commerce. Yes, I know him.
Yeah. You know what? He came in and talked to us when I was on the board of directors of the CME Group, and Pete would remember this.
He was pretty. He was pretty good.
Yeah,
he was in. He was in the Obama cabinet. Am I right?
He was in Clinton's.
Oh, Clinton's, of course.
Yeah.
Of
right.
course, they were the last
smart people.
The
you had
last sane.
You had Robert Rubin in there. You had Daley in there. You had smart people in there.
The last sane Democratic administration. The last sane Democrat. I love that. Primary season, Bernie Sanders did very well in the early primaries in New Hampshire and Iowa and some other places. And the Democratic bosses had to stop that. And what's his name in South Carolina? He's the number 2 or 3 ranking Democrat in the House. He's been there forever. African American guy. He made sure that Joe Biden won the South Carolina primary. What's the guy's name? I can't think of his name. But if Bernie Sanders had won the South Carolina primary, he would have been the nominee. Oh. He had a lot of vote. He won. If I'm not mistaken, he won in New Hampshire. I think he won in Iowa. I don't know. My memory is not that good. I think I'm half asleep. What's the name of the guy? Somebody who's the he's a House leader. He's a very smart man. I'm not knocking him. And he was the moderate, and he prevented Sanders from winning in South Carolina. He got Biden over the line. Biden, who could barely walk and talk, got him over the line. But I love this Bill Daly stuff. God, you are Perusian. You're something. You're some.
Yeah, he pulled that out.
He pulled it. And you're right, man. That Clinton administration was the last sane Democrats.
Yeah.
Right.
Well, remember, but at that time we had so much going on in the world. You had Russia changing. You had everything.
Clyburn. It represents Clyburn. It came to me. I'm sorry. Please continue. I shouldn't have said.
Well, no. I was just going to say we all drank the Kool-Aid back then, Larry. All of us that were conservatives drank the Kool-Aid, but we have not seen the change as we were promised. And that's really what this is all about. And quite frankly, on the other end of this, it could be phenomenal for the U.S. economy once we're all done with this.
Just, leave Trump alone. He's doing good things, for Christ's sakes. Everybody, even these Supreme Court justices, even the ones he appointed, went out against him. But that doesn't matter. He's going to continue reciprocity. He's going to continue. He's got plenty of tariff tools. It was a stupid decision. The whole thing was stupid, but it's not going to stop. Look, the guy's trying to level the playing field. Jack is right. That's all he's trying. He's trying to allow American businesses to export these markets in Europe and Asia. Okay, and he's been succeeding slowly but surely. Sometimes he uses the stick, which is a tariff. Sometimes he uses the carrot, which is a lower tariff. And meanwhile, our manufacturing is starting to recover. I mean, look what you said. Yeah. The market is saying some of these AI related companies are investing in CapEx too much. Too much? Well, what's too much? There's 100% immediate depreciation. All right, they're not all going to succeed. Some of these companies, but it's a fabulous thing. It's like we're doing more than what we need in AI. It's terrific. Some companies are not going to make it, but most of them will.
Yeah, and I think people just, they jump on the bandwagon of this thing, and then it becomes a thing, so to speak.
Yeah,
but
yeah.
I'll give you a great company. I'll give you a stock pick that I really like a lot, which is Google, and or Alphabet, if you want to call them it. But because they've got their AI infrastructure, they've got Gemini 3, they've got their own chips that they've got, the TPU chips that they use across the board. This is a company that, oh, by the way, search still growing. How about that? They've got 90% of the market share, and they still have a growth of 17%. So I look at that, and I look at, the long-term growth where they've got Waymo and they've got quantum computing and some of that, but they've got that high, CapEx. It makes sense, and they've got the money to do it. So, I know that some people look at that and they see some concerns. I'm not concerned at all. As a matter of fact, I like the stock a lot, and I look at it with a PE still of 26, a forward PE. I think there's a lot of reasons to look at certain names that are out there that are part of this whole AI trade. I'd throw Caterpillar on there as well, because somebody's got to get in there to build all this stuff, right?
I love that.
I like Caterpillar.
I love that. We had so much fun by the way, the congressman was Clyburn. I got that right. He saved us. He saved us from Bernie Sanders. Fellas, we had so much fun. I just have a minute or two. Jack Perusian, favorite investment play right now, real quick?
I'm looking at the exchanges. I think CME, CBOE, ICE, they are the world's financial toll booths. With all of this volatility and all of this news, they are going to make out very, very well in this environment.
Did the exchange in Dallas open up yet?
They are just about to. So is the one in Miami. They're getting ready, and they're also working. This exchange world is fantastic, and again, they're very little risk, and the barrier to entry is very high. But once you do get in, it is a gold mine. It's a cash cow.
They're killing New York. They're killing Mandami in New York. Pete Najarian, I love the Google play. You got one more for us?
Well, I like Google. I like Caterpillar. I'll give you silver. I'm going to go to that because it got pounded back after that big jump, and now it's all of a sudden starting to move again to the upper side. But the CBOE Global, I got to tell you, the amount of call buying that we are seeing in SLV has been absolutely incredible of late. So I think there's still something there. I think there's still some juice in there. It made a big run yesterday. I think it's going to continue to run a little bit higher, maybe back up to where it was.
It's an industrial metal.
It is.
It's different than gold.
Right. It actually has a use, and it has an incredible amount of use, and the demand is there. I mean, we talk about AI all the time. Well, this is the first level before AI. You've got to start with silver.
Well, it's almost a rare earth metal.
Yeah.
I mean, I think you're right. So the exchanges in silver, I love that.
The Larry Kudlow Show.